All-share index has lost 0.13% to close at 36,480 points. Now, the fall could be attributed to losses seen in companies like WAPCO, Cadbury, NCR, Champion Breweries, and Okumu Oil, while the gainers of the day were PZ, Guinness, Julius Berger, Union Bank of Nigeria, and UBA. Now, Nigeria's stock index took a 0.13% haircut today, extending losses from the previous session. Unimpressive Q2 earnings from First Bank of Nigeria Holdings also added to market gloom as investors look to other sectors for comfort. Olumide Akindele, equities analyst at Diamond Bank, joins me now for a review of today's trading activities. Thank you so much, Olumide, for your time.
Hello, Esther. How are you?
Well, it looks like we saw more market gloom today. The all-share index taking a 0.13% haircut in addition to 0.14% the previous session. That brings the total loss in 2 days to about 0.25%. Now, of course, a major focus today was Q2 earnings from First Bank, which came out, should I use the word disappointing? But let's just talk about how the market digested it right from the time the results were released.
Well, the markets have obviously shown strong signs in terms of up to date, in terms of rewards. I think what's happening at the moment is with the banking sector that form a very rally point of the NSE market. Has been driven by more perception and expectations. You must remember that most of the banks are coming from a low base last year where the profitability and the strength and the income drive from most of these banks were very high. And now we're beginning to see a slight stabilization of the results and expectations from there. And that's kind of dampened, still slightly dampened the market watchers in terms of looking at where they can see good value.
Now, before First Bank's Q2 earnings came out, of course, there had been concerns about what the bank's Q3 numbers could look like when they eventually come out. But do you think with the latest numbers from First Bank, do you think that those concerns have gone a notch higher?
Well, they have in some respect. In some respect in the sense that the investors are now looking at, okay, well, what has happened in the first part of the year, and where do we need to go for the second part of the year? In the first part of the year, we had strong earnings. We had a lot of impetus from most of the first-year banks, especially, like I said, come from a very low base. But what has just tended to happen now is that we've had a lot of regulatory issues coming towards the end of second quarter. So banks are having to readjust in terms of where they need to go in their strategy going forward for the second part of the year. However, it's not all the banks, I suspect there's not all the banks that will have this doom and gloom. You must remember that, you know, the banks have actually posted, most of the banks that have posted their results are first-tier banks. There's still value in the second and third tier banks where, you know, there's now competitions and the margins are a lot higher in terms of their returns going forward. So it's not all doom and gloom. But like I said, as you earlier said, there's a little bit cause concerns in terms of the perception or expectations of most investors.
Now, whether it's first-tier or second-tier banks, do you think these banks have the capacity, because we know that they can get creative in terms of looking for areas where, you know, in which they can boost their bottom line. Do you think these banks could surprise the market in Q3?
Yes, definitely. Well, maybe not quick. Q3 might be a very short order, maybe more towards the end of the year, and hopefully that will, you know, stabilize the prices. I think what will happen is, you know, most of the banks will really begin to look at what ways they can, as you said, increase their bottom lines, whether it's cost efficiency, or whether it's looking at innovative ways to serve the public, or whether it's going into markets they've not really traditionally gone into, like retail, for example. I think that's where a lot of people see where the next, you know, earning buttons or stability is coming from the banks.
Now, it appears the market or investors have been taking comfort in other sectors. Today, we're looking at fast-moving consumer goods, top on the gainers, the chart, Guinness, PZ, and one or two others. Do you think that these are sectors that could, well, help investors hold out until we see a significant recovery from the banks?
I would expect the FMGs and the constructions and the like to provide some comfort for the quick gainers in the market. But you must remember that, you know, I think for majority of most of these investors that are in for the long haul, they will still use more and more, the stability stocks like, the banking sector. Remember, what we're seeing is probably a lot of speculators taking the gains as much as they can take in terms of where the prediction is or the perception is in terms of the returns they can get. So I think, you would find, the FMCGs and all that also having some gains or some measurable gains in terms of a little bit of stability going forward.
I spoke to a trader earlier today, and he says that he believes the market is already in an oversold region and is expecting the key indicators to pick up, but it appears the market may not be ready for that. So in terms of your outlook going forward, tomorrow is mid-week trade. Do you think we could see a reversal, keeping in mind that many of the stocks are now beaten down and actually very good entry points for investors?
Yeah, I think going forward, I think we will see a little bit of stability and bounce back. You tend to find that, when the results are coming out for most of this industry around this period of time, you find that a lot of speculators quickly take a decision on whether to hold, buy, or sell. So I think, the outlook for the market will obviously be stable. I mean, year to date has grown 29%. So I don't see any, from an investor's point of view, year to date or year to the end of the year, he or she will still have good returns.
Okay, looking at the banking index, it was down 1.9% yesterday and flat for today. Going forward, what other sectors do you think investors could also look to, apart from fast-moving consumer goods and construction, looking at some small cap or penny stocks that actually could be attractive to investors?
Yeah, again, it depends on whether the investor is looking to whether speculative or whether they're looking for the long haul. The banking sector as well as the FMG and some of these sectors are still long-term outlook good buys as far as that. But again, that's not to say that you cannot get good real value within the markets with certain sectors or certain companies. Again, I think it's just one of those things that an investor has to really think what the decision is in terms of whether he wants a quick return or quick value or in for the long haul.